What's going on, guys? Welcome to another video. I want to do a short breakdown on this trade that I took today on YM. It was an absolutely perfect setup. You guys can see this was the trade that I took. It offered a 4.42 risk reward ratio. And if you guys are new to my channel and you're looking for some trading help, I did put a couple links in the description below. One to my Instagram if you would want to DM me and ask questions. And there is one if you want to inquire for my one-on-one mentorship, to where you can just book a call with me. And on that call, we'll kind of like get to know each other and see if we would be a good fit to work with each other. So breaking down this trade, if you guys are new to my channel, once again, I'm only trading indexes. I like to trade YM, ES, and NQ. Those are my three pairs to go to. And let me give you guys some game real quick. When you guys are trading NQ and ES, their price movement and overall the technical analysis is very, very similar. But I've noticed that YM moves a little bit differently than ES and NQ. So if you guys want, maybe you could look at ES and YM, or you could look at NQ and YM. But with me, I prefer to look at YM and NQ. Usually if there isn't a setup on NQ, there's going to be a setup on YM. So let's break down this trade, exactly what I saw. First of all, I am on the 30-second time frame when I'm trading. And some of you may be looking at this video and you're like, Colt, what are you saying you're on the 30-second time frame? That's absolutely absurd. How do you not like get really emotional, and how can you basically sit there and wait for your trade to come? Like, I couldn't do that. Look, guys, it's all in your head. It's all in your head. You are making that story up and you're making yourself believe it. This is what I've come to realize with my personal trading strategy. This may differ for you and somebody else, but I'm looking for a specific pattern to be formed in the market. And on the 30-second time frame, a candle is being printed every 30 seconds. Versus on the 1 minute, it's 2 times slower. If you're on the 5-minute, 15-minute, 30-minute, a new candle is opening up every 5 minutes, 15 minutes, 30 minutes. So that's just my personal opinion. I am an intraday / scalp trader. Like, I just need to show up in the markets. I need my setup to appear, and I'm in and out of the market. Like with this trade, guys, I think I was in this trade right here for, 18 minutes. That was a little bit on the longer side for me, but at the end of the day, that's completely fine because I was doing other things while this trade was panning out. So I am on the 30-second time frame. You can use the 1 minute. I just prefer the 30-second. I feel like that's just such an immaculate time frame to use. The 15-second is reasonable, but the 30-second I think is just really perfect for me. So as I was looking at the market, first things first, I want you guys to understand that when I first get to the markets, I'm kind of like zooming out of the market to get a perspective on what type of trend we're in. And you can go on higher time frames and do that, but honestly, I don't need to do that. I'm staying on the 30-second time frame the whole time. I'm not doing some top-down analysis. I'm not going from the 5 to the 1, then the 15, and getting this idea and what's happening on this time frame. Like, no, I'm on the 30-second time frame the whole damn time. So as I'm looking at YM right here, I saw we were in an uptrend. So immediately my bias was to go long. I'm going to be taking buys. And let me give you guys a little golden nugget. It's very, very easy, and like you guys should all know this, but the thing with indexes is a majority of the time you should be betting that they're going to go up. We want to be taking buys more than taking sells. So as I was looking at the market, automatically my bias was to go long. I saw price was making these higher highs, these deep higher lows, these higher highs, higher lows. And I saw that we had this higher high form right here. But I was looking within this higher high, from this low to this high. I was looking at this higher low right here to this higher high. And what I did is I got my Fibonacci from the higher low to the higher high. And the key levels that I was looking at, that you guys should be using as well, are let me extend this so it's easier for you guys to see. The key levels that I like to focus on are the 3 levels right here. 6.2, 7.05, and 7.9. So as price was coming back into make this higher low, what is it doing? It's coming in, retrading into the 6.2. The 705 was even hit. The 7 and 9 was hit. So if you guys want my Fibonacci settings, here you guys go. You guys can thank me later. Just take a screenshot or set them up real quick. Pause the video. Here's the bottom settings right here. Once you're done, click OK so it saves. So I saw price coming into the 6.2, 705, and 7.9. I took an entry right here at the 6.2 as price was retrading it into this area right here. Now I knew an expected price to not go lower than this previous higher low right here. If it was in a valid uptrend and it wasn't going to do any BS that indexes sometimes like to do, it wasn't going to go lower than the 100% level right here. And I have it deviated and written up and colored as red because that's usually my stop loss level. I have it green at the negative 100% because that's usually my take profit level. So I had my stops right here, right at this previous higher low. And then as price made this extension from the 100% level to the 0% level at the higher high, my negative 100% level was put up here. That's where my take profit was. Now, if you guys look at this trade right here, within this range right here, we do have a fair value gap that was formed right here. You could have taken a trade off that. But if I would have taken an entry all the way up here at that fair value gap, it would have gave me a 1.24. Now, I'm not hating on fair value gaps. I love them. I use them. But if you guys want to get a better OTE, a better optimal trade entry, the Fibonacci's are the freaking way to go. So that's how I got this crazy risk reward ratio of 4.42. My take profit was 4 times the size of my stop loss because I use the Fibonacci's. These are my optimal trade entries right here. So that's what you guys should be looking at when you're using the Fibonacci's. And then simply what I did is when I got the fibs from this higher low to the higher high, the negative 100% level was where my take profit was set. So that's the breakdown of this trade. I hope you guys enjoyed it. Definitely check out my channel. I have a ton of other videos. And if you're looking for help with your trading, check out the links in my description. And I will talk to you guys soon. Bye, guys.
Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.